Welcome back to Imaticus Learning, where we simplify finance for everyone. Whether you are an entrepreneur, a small business owner, or just curious about accounting, today's video will help you understand a key choice every business faces: cash versus accrual accounting. So, why does this matter? Well, picking the right accounting method can change how you see your cash flow, profits, and overall financial health. Stick around to learn which method might save you time, money, and even future headaches. Let's start with the basics. Accounting methods are just ways to record the money going in and out of your business. The main difference? Timing. Specifically, when you record income and expenses. Think of your business like a piggy bank. These methods determine when you put money in and take it out. First, we have cash basis accounting. This one's pretty straightforward. You only record money when you actually get it or spend it. Let's break down what that means. Revenue recognition. Say you sell a product today for rupees 1000. With cash basis, you record that rupees 1000 as revenue only when the cash actually lands in your hands. Expense recognition. Expenses work the same way. If you get a bill but haven't paid it yet, it's not counted as an expense until the money leaves your account. Advantages of cash basis. Simplicity. This method is easy to use. No complex tracking of accounts receivable or payable. Clear cash flow visibility. It's perfect for small businesses who want to keep track of exactly how much cash they have at any moment. Disadvantages of cash basis. Limited insight on financial performance. This method may not reflect the actual financial health of your business over time. Limited suitability. It's mostly used by small businesses, freelancers, or sole proprietors. Larger companies usually need something more comprehensive. Now, let's look at accrual basis accounting. This method records revenue and expenses when they are earned or incurred, not when cash changes hands. Revenue recognition. Imagine you provide a rupees 1000 service in January but don't get paid until February. With accrual accounting, you would record that rupees 1000 as January income because that's when the service was provided. Expense recognition. Expenses work the same way. If you get a bill in January for services already rendered, you would record it as a January expense, regardless of when you actually pay it. Advantages of accrual basis. Accurate financial picture. This method gives you a true view of your business's financial health as it aligns expenses with the income they help generate. Required for larger businesses. Most large corporations and any publicly traded company must use accrual accounting as it meets standard accounting requirements like GAAP. Disadvantages of accrual basis. More complexity. It's more detailed and requires tracking accounts receivable and payable. So it's a bit more complex to maintain. Cash flow challenges. Accrual accounting can make it harder to see how much cash you actually have on hand. So many businesses need additional cash flow statements. Alright, let's do a head-to-head comparison to see how these methods stack up. First, revenue recognition. Cash basis. Only when cash is received. Accrual basis. When earned, regardless of when cash comes in. Second, expense recognition. Cash basis. Only when cash is paid. Accrual basis. When incurred, even if payment is later. Third, accounts receivable and payable. Cash basis. Not recorded at all. Everything is cash in or cash out. Accrual basis. Tracked carefully. Accounts receivable shows what customers owe you and accounts payable shows what you owe others. Fourth, cash flow visibility. Cash basis provides immediate visibility. You know exactly how much cash you have. Accrual basis requires separate cash flow statements as profits might not match actual cash available. Fifth, Suitability for business size. Cash basis, ideal for small businesses, sole proprietors and freelancers. Accrual basis, necessary for larger businesses and those looking for a comprehensive financial picture. So, which is better? Well, it depends. If you are a small business just starting out, cash basis might be the right fit because of its simplicity. You'll get a clear view of your cash flow. But if your business is growing or you are planning to seek investors, accrual accounting will give you a more accurate picture of your profitability and financial health. Both cash and accrual accounting have their place in the world of finance. Whether you are keeping it simple or going for the full financial picture, understanding these methods will empower you to make the right choice for your business. If you enjoyed this breakdown, hit that like button and don't forget to subscribe for more financial insights.